results revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
The Fed policy will be driven by the pace of the data. Same policy will remain accommodative of the
Futures
mix
off
of
two
tools.
sessions low, still down about 1% on the day for a little more than 4 pennies.
Everyone who may not understand that, IWM is the ETF, the Exchange Traded Fund, which is the tracks, point for point, so to speak, the movement of the Russell 2000 index. So, buying what you'd buy, would you buy an IWM call, John, or 100 shares of IWM?
Well, you can either do a deep in the money IWM call, or you can do 100 shares of IWM.
Okay.
The difference is whether or not you want adjustability with the call. So one of the things you can do with this trade is buy and sell the call position if you have multiple calls to help control your delta.
Right.
For example, if I had 30 Russell butterflies on, I could buy 3 calls, and I could, maybe get rid of 1 call or add an extra call for finer adjustability of the trade. And if you do that, it does increase the chances of winning, and you usually make more money. If I wanted to adjust, okay, go ahead.
Just real quick, Phil's asking to repeat the wing width and center position in the chat. It looks like it's 50-point wings, Phil.
Yeah, here's the picture. It's 50-point wings.
Right.
We're doing a 750 butterfly. The market's at, 770 something, and it's 50-point wings.
Right.
This is what the entry position should look like. You basically have the butterfly here behind the market. You have a T+0 line that's basically flat all the way up. And, of course, according to the graph, your biggest risk here would be a hard drop. But there are ways to manage that as well. So,
now, John, real quick, if you could just explain for folks why you're calling that deep in the money call a stock surrogate.
okay, so here's the thing. If you were to buy for example, if I was to buy an 805, an 800 Russell call,
right,
or something that's close to the money, it's going to have a lot of extrinsic value, which is value, matter of fact, all the value of the extrinsic value, which
right,
is going to cause a negative theta situation and also a positive Vega situation.
Mm-hmm.
So by doing a deep in the money call, I no longer have a theta problem, and I no longer have a volatility problem, because the call is meant to protect the position on the way up, and usually on the way up you'll get a volatility drop, which will take time value out of the call, and as time goes by, you're going to take time value out of the call. So over time, this line is going to really start to sag on you, and a lot of times you'll get the up move, but when you get there, the T+0 line isn't up here anymore, it's down here somewhere.
Right.
So by buying the deep in the money call, you're avoiding that. That call basically is going up dollar for dollar with the Russell.
Right. And there's less time decay associated with that one.
There's virtually none, because you're buying something with like $100 in time decay, and on a position that size is really nothing.
Right, exactly. So it's almost acting like you're owning the stock. Brad says, does he pick long based on delta or extrinsic value?
Extrinsic value, but I don't want to get too much money into the position.
Right.
Right, so like in high volatility environments like now, I'm not going to go so deep into the money that it's going to cost me, a ton of money to do the position. So I'll take on a little more extrinsic value.
Mm-hmm. Okay.
Yeah.
Great. Good.
Okay. So basically this is the position. On a down move, what we're going to do is we're going to take this butterfly and basically roll it back when we get about 20 points below the short strike, which is going to be, about 740. And on the upside, I'm basically looking at a picture here, and I'm saying, well, when this line starts to sag too much for my comfort, and my delta gets too high for my comfort, I'm simply going to take one of these shorts and then roll it out to flatten this line back. And that's basically the concept of the trade. In general, you can hold this position for a 40-point up move and a 40-point down move without too much trouble. So right off, you have a 80-point range before you really have to touch the trade in most cases.
Mhm.
And in a normal market environment, the Russell doesn't necessarily move that far. So a lot of times you can get through this without any adjustments. However, the way the market's been lately, you're going to need to do something.
You could get a 40-point move in one day pretty easily today.
Right.
Thank you for watching this clip of our Options Tribe webinar. The rest of the recording is available on OptionsTribe.com. I'm Seth Freudberg, and I've been hosting the Options Tribe since May of 2011. We've brought in options experts from all over the world to make excellent presentations to our members. So go right now to OptionsTribe.com to learn more about options education, or you can send me an email at sfreudberg@smbcap.com.